Hello, good evening, everybody. How are you all today? Can you hear me? Now, before I begin, I want to welcome you all coming to our Bursa Young Investor webinar number 6, which is choosing the right investment strategies. Now, just want to check whether you can hear me clearly. Now, on the control panel of the webinar, you have a raise your hand button. If you can hear me clearly, could you please click the raise the hand button so I can see you? Okay. All right. We have a lot of you raising hands now. There are still some people haven't raised the hand yet. Nina, do you face some difficulties? Okay. Bunkiet, can you hear me? Okay, thank you very much for your attentions. You may now put down your hands. Okay, you may put down your hands now. Okay, thank you very much for coming to this webinar. Now, my name is Shane. I'm the host for this webinar. And today we have invited a seasoned investor and trainer who can share with you how you can choose the right investment strategy in different market environments. So before we begin, I want to tell you that this is the last webinar that we organize for this term. So we have over the past 6 months, we have introduction to stock market in October last year, master again on stock in November last year, understanding market indices and sector in December last year. In January this year, we have master fundamental analysis in value investing. And then in February last month, we have basic technical analysis. And this month, we have choosing the right investment strategies. So without me awareing, we are coming to the end of the term. Now, so let me introduce our speaker today. Now, we are very honored to have invited him again to come to our platform. And so far, he has appeared to several of our webinars. And he is graduated from National University of Singapore. He has more than 26 years of working experience with several public listed companies. And he is the author of 2 best-selling books called Invest in Foreign Shares and Invest in REITs. And he's a full-time investor, author, and trainer, and has been investing in Bursa international market since 1985. And today, he's going to share his experience with you. Now, without further ado, I want to pass this time to Mr. PC Wong.
Hello, a very good evening to all of you. And I will just switch off the camera after a while. Very honored to all of you listening in. And let's go and start our webinar. Okay, we talk about choosing the right investment strategies. So first and foremost, we will look at factors that influence the market, investing in a company on your own, investing in a trust fund, investing with your own money, investing via other people's money, short-term OPM, using gearing and margin lending, trading versus value investing. Now let's look at factors which can affect the market. There are external factors such as global events, major trading nations' policies, and state of economic health. For example, the economic health of the US, and China, Japan, and the EU. Then we also have internal factors, which are normally government policies and state of the economic health of the country. What are the external factors? The world is actually interconnected via global trade. And because of this, there will always be global demand and supply, which will determine the price. The policy of a major economic power can also influence global trade, such as in the US, we have the Federal Reserve acting as a central bank of the US, where they dictate the interest rate. And recently, we have the ECB that comes up with the central bank policy of further negative interest rate and also further bond buying through their quantity easing. Then, of course, the policy of a major economic power can also dictate things like trade sanctions. Like in previous history, we have the trade sanctions against North Korea for their nuclear testing. We also have trade sanctions against Iran for their nuclear program. So all this actually can impact other countries here when there are trade sanctions. Okay, then there's also tariffs and taxes, okay, that will impact upon prices. Certain tariffs, like the US, sometimes they implement tariffs against China for dumping their steel products into the US market, okay? And also certain taxes, for example, some countries may have certain tax against certain products that are imported into the country. Then there are the trade agreement with other trading nations, okay? For example, in the North American Treaty, they have the NAFTA, and recently we have the Trans-Pacific Treaty, okay, that is now being voted in the US, okay, and also over here as well. Then, of course, war, where a declaration of war can actually have severe impact on the global markets. The state of an economy of a major trading nation also can influence the stock markets of the world, because we have seen in previous history when the US have a global financial crisis, all the markets worldwide suffer a huge drop, okay? And then we have recently in August and in December when the Chinese stock market crashed, okay? We also see that a likewise reaction in global markets across in Asia as well as Europe and the US. This is because the US, China, EU, and Japan are they themselves represent 70% of the world's GDP. So all these four countries, the EU is a bloc, together they represent 70% of the world's GDP, and therefore they exert tremendous pressure collectively on other stock markets if any one or two of them collectively have a very bad economic data coming out. Okay, most probably China, US would exert greater influence versus if it's just happened in the EU or Japan. But the recent ECB policy from the EU did actually cause a global stock market to actually rise. So let's look at internal factors. It has a lot to do with government policies. For example, in the budget announcement, there are certain spending, subsidies, taxation, and consumption policies. Okay, things like spending on infrastructure may benefit those companies that are listed in the construction sector. Okay, certain subsidies that may benefit, let's say, perhaps in the IT, okay, or biotechnology, where the government may actually allow certain special waivers, okay. Taxation, for example, sin tax on BAT, okay, or alcohol tax, okay. And then because the budget effects may come up with certain things like income tax, and therefore, if let's say there's a greater increase or low of income tax, it can impact upon consumption. So there's also government policies where there's restrictions on certain trades, okay, that will affect import or export. And then there could be investment related, for example, waiver of privileges for specific industries, and this will actually impact upon the FDI, okay, foreign direct investment. There's also government support of the market through value cap and other institutions, okay, and Bank Negara interest rate policy. These are some of the major factors that can impact upon our stock market locally. And of course, state of health of our country economic or selected sectors of the economy. Sometimes the certain sectors will feel the brunt, whereas others would not feel it so much yet. Okay, for example, last year, the GDP was not too bad. Okay, Malaysia still registered quite a good GDP figures, but then we see that some of the oil counters are being hit because of the fall in the oil price. So these are what I call selected sectors of the economy facing the impact first. Okay, like sometimes those counters that are in the retailing industry, the retailing industry is also one of those sectors that will feel the brunt of a slowdown first because it directly impacts upon consumer consumption, and therefore retail would likely feel the impact, one of those that feel the impact first. But they are also one of those that will recover last because only people when feeling much more confident will they then start to consume more. Okay, so these are certain sectors that can be impacted in the span of a country slowdown. So I think you have seen this chart before, but this is an example of a central bank policy. We discussed previously about the Federal Reserve QE. You can see that at various sectors of the points, okay, it can impact upon the KL, the Bursa, the FBM KLCI index, yeah. Okay, at certain point here we have QE3, then here QE2 and QE1. So this chart, I think some of you have seen it before. The other example is oil price war. Now, since the oil price has started falling here, okay, you can see that this is in June, and around towards October when the OPEC decides not to increase not to decrease their output, okay, but instead increase their output to gain market share. Oil price has started to trend down. Okay, you can see the arrow here. Okay, trending down for more than a year. So concurrently, you can see that it impacts upon Sapura Kencana. Okay, somewhere around here. Okay, you see it going down. Okay, but in Dialog, the damage is less severe. Now, the reason is because Dialog is less impacted because it is in the oil storage business, whereas Sapura Kencana is directly impacted because it provides oil services, because it is directly related to those petrol or oil exploration business, yeah, where they actually charter Sapura Kencana's vessel and such. So, therefore, being directly involved have greater impact here, but being a storage, less impactful. Okay, so this is what an oil price war between the OPEC and the US, okay, can actually impact directly some of our oil counters here locally. Then the other one is the price of commodity. Now, as the US dollar strengthens, okay, you can see that the price of commodity starts to drop, and in this example is crude palm oil, which is measured in US dollar. Okay, you can see that it starts trending down, and that before it starts trending up, okay, towards late last year and early this year. So you can see this is IOI Corporation, again similar behavior, going down and then moving up. So if let's say you are interested in plantation, then you need to keep an eye on the crude palm oil chart. Okay, a lot of times, a lot of people when they do certain investment, they do it without certain reference to some pricing data. This is not right because you do not know what are the trending price chart of certain commodity, or in this instance, okay, we have the BALTIC dry bulk index. Okay, now the BALTIC dry bulk index measure the dry bulk freight charges. Okay, and you can see that from a peak of around 12,000 points, it has fallen to less than 300. Recently have improved, okay, up to more than 300. Priorly, it was over here, which is less than 300. So again, Maybach, you can see the impact because Maybach is a dry bulk carrier. So if let's say you want to invest in shipping stocks, okay, you must make reference to the BALTIC dry bulk index, because then you will know that whether because the dry bulk index measures the freight charges, you will know that whether Maybach revenue, okay, is going to be impacted or not. Okay, just to share with you a conversation I had with a friend, okay, he told me that a friend of his asked him to buy Maybach because the stock price has been severely depressed over, over almost a year. So then his friend said, okay, let's buy Maybach because it's very, very cheap now. Now, being cheap is not the reason to buy, yeah, okay. If you buy it when the index, okay, is at its lowest, there's no guarantee that it won't move further down again. So either you'll be locked into a stock that remains cheap, but opportunity to go out of the current level will be very minimal. The chances for the stock to increase in price will be rather minimal because global trade is not picking up yet. So then, yes, you can buy it cheap, but how long can you hold it? You might be holding, let's say, Maybach for extended period of time, longer than you wanted to. So that is why, if you are interested, okay, to invest, look at the BALTIC dry bulk index for an uptrend. Now, being from below 300 to 300 plus, this is not a good enough indication. Yeah, it must go up higher still. At least then you will know that there is an uptrend. Okay, but I can tell you that the BALTIC dry bulk index is not likely to go up anymore anytime soon because the recent commodity price increase, okay, is nothing but a so-called dead cat bounce because it's in a bear market that it rallied. Okay, it hardly make any difference because concurrently there will be a lot of new dry bulk ships entering into the market in the coming months because most of these ships were commissioned to start building, okay, a few years back when the index was still at a high. Okay, so now the ships are nearing completion, they'll be entering to the market, okay, and there'll be more ships, okay, fighting each other for freight. So that's why the BALTIC index would be quite under pressure for longer bit of time. So always remember that if you want to invest in, and if there's any reference, okay, of a price chart or an index that measure a certain sector of the industry, do make reference to them and not buy because it has been discounted, okay, from previous highs. Okay, here's another example which we look at local impact. Okay, we talk about the GST implementation, which started in April last year. So we look at BAT. Okay, we have the GST, okay, in April, and immediately there's a response. And just as when everything was going on quite okay, there's the increase in syntax, okay, and push the stock lower, okay. Whereas another consumer discretionary, okay, Carlsberg, yes, there's an immediate impact when there's a GST, but in the absence of any additional taxes, unlike BAT, the stock is now managing quite well and is trending upwards. Okay, then we look at Bonia, which is actually one of the premium brands, okay, and the GST has an impact, but not only that, there's also an external factor. Now, this external factor is because Bonia also have a very strong following in the Middle East. But just as the oil price war started, okay, and deteriorated, and right now a lot of the economy in the Middle East are in a spiral of deficit, spiral of budget deficit, which means that they are actually issuing bonds, okay, to cover their spending. They are actually selling off their sovereign funds investment, okay, to have the money to sustain the economy. So in this regard, it is not only first time being impacted by the GST, but further impacted by the slowdown in the Middle East. Okay, and then we look at SP Satir. It is a big ticket item. Okay, as soon as there's GST implementation, people's consumption has been impacted. Okay, and there's lesser money now. Okay, to look at certain future investment and such. Okay, now it may look little. Okay, for example, that 6%, but cumulatively, okay, over a year total spending, it can be quite significant. So that's why there's an immediate reaction. Okay, until such time that there'll be some adjustment. Over here, we see immediate so-called reaction, but then we see period of adjustment here as well. Okay, so that after a while, people will feel more comfortable. Okay, this is how the GST has impacted upon consumer discretionary and an example of a property stock. So let's look at investing on your own. What do you need to do? Now, first and foremost is your financial resources. Okay, you need to invest within your means. Okay, or opt for margin financing or arbitrage borrowing. We will look at individually these three types of investment. Now, most importantly, the risk level you must understand. Okay, because it can impact upon your losses or your exposure to any potential losses. Okay, then you need to do your own research and analysis to lower your risk exposure. You need to plan your entry and exit strategies, okay, well, okay, so that you do not suffer any huge losses. Okay, you have to take charge, be in control, and be disciplined. Now, there's also, for people who are too busy to look at investing on their own, there's another alternative, which is investing in a trust fund. Okay, it is an alternative when you do not have the time to manage your own investment. Now, trust fund is all managed by a professional team of managers, fund managers, and you can have various exposure into regional and foreign markets, commodities market, money bond market, and specific industrial sectors. Okay, there are some that are exposed specifically to REITs. Okay, there are also some that are exposed to just purely the bond market. Then, one thing you must know is that in buying and selling the trust fund, okay, it is not live like we have when we do trading in stocks. Yeah, but the buying and selling price is subject to the day's closing price. Okay, for example, this morning you open the newspaper, okay, or you go to the fund's website and you see this particular fund today is 1 ringgit. Okay, you cannot buy it at 1 ringgit. You can only know what is your buying price, okay, at the end of the closing. So maybe it will drop to 0.99 or it may go up to 1.01, okay, depending. So you will only know your buying or selling price at the end of the day. Now, all these unit trusts, of course, you need to pay the management fee because it's managed on your by a team of professional managers here. So these are some of the major trust funds in Malaysia, okay, and I'll leave it for you to look at all this longer later when you can download. Yeah, investing with your own money. Now, this is the best option if you are a new investor. Okay, your profit or loss from the investment is limited to the amount that you have at hand to invest. Okay, this means that if you have 5,000, you want to invest, okay, your loss will be limited to this 5,000 only. Okay, if you have done your homework well, from this 5,000, you can actually, okay, discover some profits, and then your money will grow from 5,000 maybe to 7,000, assuming that the stock you invested, okay, has increased in price by 20%. But you could have, assuming that company suddenly went into those PN grade, okay, then you could have lost everything, but it's still limited to that 5,000, okay. So before you do any investment, you must know that, okay, there's always an opportunity cost. Now, if you were to part away this 5,000 for investment, okay, your opportunity cost is the around 4.1% FD rate that you could actually enjoy were you to park your money into a bank. Okay, so this is your opportunity cost. So that is why it's very important for you to, when you want to invest, okay, make sure you earn higher than the 4.1%, okay, in terms of profit. Because if you make 2 or 3% profit, it is meaningless. You might as well put your money into the FD. Okay. Now the period for settlement when you invest, okay, is T plus 3. T is the trading day and plus the next 3 days. So which means on the 4th day, you definitely have to pay the brokerage already. The other is margin financing. Margin financing is more suited for trading versus long-term investment. Why? Because when you borrow money and you put it over the long term, the longer term it is, the higher your risk will be when you use borrowed money. Okay, so that is why if you are going for long-term investment, my suggestion is always use money you can afford to lose, not borrowing. To trade, you need to have certain skills level, especially in technical analysis. Now, because margin financing has a limited time period for you to settle, and therefore you must have certain technical skills to understand, okay, where are the entry points and where are the exit points so that you can make money from the trade, okay. You also need to be highly disciplined. Now, if let's say you can make certain percentage, okay, to get out, you really have to get out and not, hope for certain improvement in your in terms of profit. Okay, here's an example how margin financing works here. Now this is from the maybanktoyou.com.my website. Okay, now margin financing facility, okay, via bank borrowings. Okay, you can have either of this collateral, okay, fixed deposit or share or cash at hand. Okay, the margin facility is 2.5 times for FD, 1.5 times for shares or cash. Okay, trading facility is 1 time, so total available facility is 3.5 times and 2.5 times. Okay, so while margin financing can allow you to leverage on the amount of capital you have to trade, okay, always remember, okay, there are the pros, there are the cons. Okay, so afterwards we will examine each individually. The settlement period is T plus 10. So how to trade using margin financing? Now, assuming you have 10,000 and you borrow 10,000 from the margin account, you bought 5,000 shares at 4 ringgit for a total of 20,000. Now, the share price increased from 4 to 450. So you sold your 5,000 shares at 450 for a total of 22,500. Of course, you have to pay back the bank 10,000 because you borrowed 10,000 over here. Okay, you have now 12,500. So you earn a profit of 2,500 from your margin trade. So out of 12.5% gain in the stock price from $4 to $4.50, you actually earn a 25% profit. Okay, because you only started with 10,000 of your own money. Now, so you can see that margin financing allow you to amplify your earnings. Now, just as margin financing can allow you to amplify your earnings, in this scenario, it can also amplify your loss. Okay, so again, in the same scenario, okay, we look at you having the same amount of 10,000, you borrow 10,000, but this time the share price dropped from 4 ringgit to 3 ringgit. Okay, so you sold 5,000 shares at 3 ringgit for 15,000 ringgit. You have to pay back the bank 10,000, so you are left with 5,000. But you see that you actually suffered a 5,000 loss, implying a 50% loss from a 25% drop in share price. Okay, so you can see that while there are pros that you can amplify your earnings, okay, the cons are that you can also amplify your loss. Okay, so that's why margin finance carries with it certain risks. Okay, so it works well in a bull market because in a bull market, the trend for stocks, okay, to move up are much higher. Okay, so that you can actually make that trade, and because the sentiment, market sentiment is very, very good, okay, you can actually exit and gain with the profit. So it works very well in a bull market, but the risk will grow in a very volatile market because things can go up and come down pretty fast. Okay, because why do we call a market, what do we mean when we call a market volatile? When the market is very volatile, okay, there is mixed sentiment. In a bull market, the sentiment is pretty fixed. Okay, everyone is very bullish. But in a very volatile market, there are optimism as well as pessimism. So sometimes when pessimism overrides the optimism, the share price would fall. Although initially there's optimism, yeah. So people become less adverse to risk, and the moment that they see small gain, they want to exit the trade. Okay, whereas you might hope for a longer profit trajectory, okay, before you want to exit. So sometimes you are caught that, with just a small percentage of gain, the stock would actually start falling. So that's why this is called a very volatile market. Margin call. Now sometimes you may be faced with a margin call, okay, to prompt you to deposit additional money or shares to maintain the minimum amount in the margin account. Now, if you fail to maintain the minimum amount, the broker will force sell your shares in order to achieve the minimum amount. So again, this is another risk in margin trading. Now, you always have to maintain a minimum amount in the margin account. Now, assuming your trade goes from bad to worse, okay, not only will you have you lose money, okay, in that trade, but in a very pessimistic environment, okay, some of your shares which are actually collateral will also drop in price, and therefore, you will not be able to meet that minimum amount, and therefore, you will have a margin call that you might have to put in more money into the bank, okay, to ensure that the minimum amount in the margin account is met. Okay. However, this amount can vary from bank to bank. Okay. It is important for you to read the terms and conditions when opening a margin account. Arbitrage. Now, there are some savvy investors who will borrow from the banks to invest in the stock market. Okay, which they anticipate will yield them a return above the borrowing interest rate. Now, this is a form of arbitrage. For example, okay, the bank borrowing interest is 8% per annum. The investor borrows 100,000 from the bank and invests in a stock. The stock gains 20% in the year, and the investor enjoys a profit of 12%, because that 20% still have to deduct the 8% interest. Okay, the above is just a simple example. You will need to be very sure of the prospect, because failure of which you will lose a portion of the capital plus the interest. Now, assuming that the investor borrowed 100,000, the stock fell 20%, and he decided to sell, okay, and he's left with 80,000. Now, that 80,000, he decides to pay back the bank. It was a poor bet, okay? But right now, not only does he have to pay, okay, the 8% interest, he has to find another 20,000 to pay back the bank, okay? Now, if he didn't pay the 20,000 back to the bank, that 20,000 would continue to incur interest, okay, until such time it is fully paid, okay. So that's why when you are doing this kind of arbitrage here, you need to be very seasoned, very experienced, and very disciplined, okay. You cannot be too greedy, okay, and not go into this without knowing the financial risk, okay. So a lot of people, they find that, you know, borrowing money from a bank, okay, instead of using my own money, I can make a kill, you know, in the stock market, and then I'll be able to have additional money. Now, there are always risks because there's no 100% of a sure trade. Okay, there are always some risk element lurking, okay, everywhere. So you need to be very sure of the prospect and not to, you know, make this as a habit. Okay, now in the international market, there are many carry trades, which are also a form of arbitrage. Okay, what we have is those investment companies, they borrow at zero interest rate, and then they invest in emerging markets, like what happened during the year 2009 to, you know, onwards, when the Federal Reserve has near zero interest rate policy, okay, and the Bank of Japan, which has always been zero interest rate policy, they borrow from these kind of countries and they put their money in emerging markets, okay, because when they borrow in their for example, in US dollar, they convert it to ringgit, okay, then they invest heavily into Malaysia, and what we have then is that the stock market will rise, okay. Not only that, because there's continuous demand, you know, to invest into Malaysia, the ringgit will also increase in value. So that is when they will exit, because they have achieved the objective of price appreciation in the stock market that they invested in, plus the forex gain, okay. So that was why when the Federal Reserve started hinting that they will increase interest rate as early as in 2014, you will see that the US dollar gaining in value. And then, you know, what happened was there was a huge sell-off, okay, in emerging markets, especially last year, okay, because US dollar now is getting more and more expensive now, and then emerging market currency are starting to fall in value versus the US dollar. So that's why they sell off, so that they can at least maintain their profit level as well as some gain in the forex, and repatriated the money back to the US. So you can see that while it looks good, okay, sometimes when there's huge inflow of foreign buying into the stock market, not many of these foreign funds, they are in for very, very long term. So that's why in a lot of emerging markets, there's severe ups and downs in the stock market. Okay, going up when there's a lot of foreign interest, and going down when there's the foreign interest exit. Okay, so that's why another case is like Brazil. Okay, Brazil was another major commodity country. Okay, but their government was rather weak. Okay, they have a lot of issues that, you know, when the foreign investor exit out, okay, the Brazil real plunge. Okay, and you know, it is a story of a country that continued to do from bad to worse, that until today Brazil is in a near depression. So that's why when a lot of funds coming in, while it looks good, okay, when they exit, okay, it can impact upon the country's currency as well. So that's why when you invest in the stock market, always, okay, have some that you can exit at certain parts, okay, with a profit, so that you can re-enter to actually achieve gain in the stock price as on the next cycle, okay. So let's talk about trading versus value investing. Now, you should choose a strategy that works well for you. Always remember that, because sometimes we are our strategy is confined by the amount of capital that we have, okay, and confined by the amount of time that we can spend, okay. Not all of us, okay, will be able to sit in front of the computer watching the price movement every minute, okay, and then perform a trade. So that is why when it comes to choosing a right strategy, okay, you have to find one that works well within the confinements of time and the confinements of capital. Now, trading requires one to be very disciplined, okay, and skillful in technical analysis to identify entry and exit points, okay. That is because if you are not skillful, okay, in technical analysis, you might miss a good opportunity to enter, and if you are not disciplined, you might miss an opportunity to exit, and therefore you can incur losses or lesser amount of profit. Now, trading is very, very ideal when the market, okay, is very volatile, enabling you to trade the low and high points. Now, but to do so, okay, requires you to be in direct involvement with the market trend, which means you need to, watch what's the market trending for that day or for that hour, okay, so that you can plan your trade. So being volatile, okay, provides the opportunity, but also not only for profit, but also the risk element, as I mentioned earlier, would increase as well. So that's why provide the opportunity, but must be disciplined so that you know when to enter and exit. Now, if you have limited capital for long-term investment, then trading may be a better option. Okay, so you can see that trading is often looked at in an environment that is very volatile. It works, okay, but also you need that discipline, okay. Now, versus value investing. Now, value investing requires one to be skillful in the analyzing of underlying fundamentals, shows, okay. Value investing is not just understanding the financials of a company, but the economy as well. Why? Because, like, if the economy is not performing too well, okay, in that particular sector, it doesn't mean that you do not want to invest in that particular company because the economy is not doing well. Okay, it could mean that future there's a potential. So in that particular economy at that point in time, it may not look well. Okay, but in the future it could look well. It could perform better. So that's why, like during the previous crash, okay, a lot of stocks actually went down. The stock market was around 800 point plus. Okay, that was the time when the economy is very dreadful. Okay, but if you are able to understand that the economy has fallen, but there is a trend that shows economy is recovering, okay, then you can actually buy during that period, okay, so that you can maximize your return. Now, assuming that you do not understand the financials, you might misinvest into a company that does not have a good balance sheet, and therefore risk affecting your investment, okay, by having major losses or being listed as a PN14 company later on. So understand financials is also very important. Okay, so when you understand the economy and the financials, there's a tendency for you to do well in value investing. Yeah. Now, it's for as an example, if let's say that the economy is not performing and the government announced a lot of infrastructure project, so that is then an opportunity for you to buy into certain construction companies, okay, because of that potential for them to grow when the economy start mending itself, okay, and also because the government is diverting funds to for the infrastructure. So these are the kind of things that you should look out for, right? Value investing requires you to park your capital over a longer term in order to realize fruitful gains. Now, when it comes to value investing, it's never for a very quick return of capital. Sometimes, you know, it takes time, okay, for you to re-evaluate the stock every now and again, okay, so that you will know that it's this company you want to stick, you know, your investment with. For example, in one of the earlier webinars, we talked about Dialog, okay. If you have, you know, invested in Dialog since 1996, it would have given you a compounded annual rate growth of 33%. Okay, so that's one company that you can hold on for a longer period. Okay, so these are some examples. Okay, or even public bank, if you have hold on to with their bonus issues and splits and whatnot. Okay, then you can see that over a longer term, yes, you do have very fruitful gain. So not all companies would actually provide you the same kind of return. That's why you need to re-examine the financials and the economy status every now and again, so that, you know, there are certain point in time where you want to exit out of that investment so that you have a lot of money, so that then you can actually diversify now into multiple sectors of the industry rather than on just one sector. So value investing doesn't mean holding onto your investment, you know, forever. Okay, it just means that once you have realized a certain fruitful gain, okay, tremendous gains from your investment, it's time then to move to other types that would, okay, yield you similar gains over the next 3 to 5 years. So, but then of course, this kind of investment requires you to park your capital over a longer term period. Okay, not like in trading, you know, you can do a day or a T+10 trade in a margin account. So in value investing, timing is of less important, okay? But the best opportunity for value investing is after a major stock market correction. So you no need to, if you want to invest in certain stocks, okay, for a period of, you know, longer, over a long-term period, most importantly is buying it when it's cheap, okay? Not so much as, you know, moving the price, looking at the price movement every day, okay? But if you are into value investing, the best time is always when there's a major stock market correction. When the market has fallen, let's say 15 or 20%, okay? Not necessarily going officially into a bear market, okay? But it, you know, but it could mean that the stock itself could have fallen quite substantially. So, but then its financials still remain very, very good. Now, value investing doesn't mean that any stocks that has been discounted, okay, is the obvious choice. No, okay. You always have to look at its financials, because it is the financial strength of a company that will determine its long-term trajectory into revenue and profit growth, okay. So if you select a company that is weak in its financials, then, you know, likelihood you will come up with losses further down the road. Now, the best of both worlds, okay, is to have a marriage of the two, which is trading and value investing. Value investing is like having a core holding of companies that can yield you good dividend, okay, yield you good capital growth over a long-term period. Now, these are the stocks that you are not or have no intention of selling, okay, perhaps in the next 2 to 3 years, okay. They form the core value of your investment. And then whatever extra you have, okay, you can look at going into trading to increase your capital growth, okay? So that also having a smaller amount in trading also would limit your losses in a very volatile market. So the best is having a core holding in value investing and another extra cash for opportunities to trade. Now, if you do not have that kind of amount of capital to start in value investing, then okay, start off with some small trade first with a shorter horizon. Okay, not 2 or 3 years, but look at it on a horizon of, you know, here I don't mean doing margin trading. Yeah? If you don't have capital and all those, you know, forget about margin trading and all those. But look at trading with your own money. Okay, but maybe on a shorter horizon, okay, of let's say 3 months to 6 months by selecting stocks with strong financials and also potential for growth. Okay, then you can exit and slowly from there you build your capital. And then once you have the significant capital which you can park for a longer term period, then you can use that as your core holding, okay, in value investing and setting and having those extra, you know, to start again your trading process. You see, the stock market is an opportunity for everyone to make money, but it is not always 100%. So sure win in all types of trades. So that's why you always need to evaluate your risk, okay, whether you can afford, okay, for arbitrage or afford for margin trading and all those. So you must understand your risk that you are exposing yourself to, as well as knowing the underlying fundamentals of the economy and financials. Yeah. Okay, question and answer.
Okay, we have come to the Q&A sessions of the this Bursa Young Investor Club webinars. So thank you so much for your time, PC. Now, because this is the last webinar, so we want to open up more time for you to have the interactive Q&A sessions. Now, in the meantime, you can type in your questions. Just now we are talking about how external factor can affect the stock market price, how internal factor can affect the stock market price, whether you should invest your own money or not, whether you should invest in a trust fund, and whether what is the margin trade account and what is the using your cash account and what is the margin call. And if you have any question in relation to this or in relation to how QE works, can also type in the question box now. But in the meantime, let's have something fun. All right, so I'm going to launch a poll now when you're waiting for you to um to type in the question. So on your screen, how many webinars have you attended? No, how many Bursa webinars have you attended? Please pick. All right, in the meantime, let me have a sip of water. We have 72% of you voted. Let me open it for another 10 to 20 seconds. Anybody not voted yet? We have 76 of you voted. Okay, let me close the polls. Hang on, yeah, let me close the polls. Okay, let me show you the poll result. All right, so this is the poll result. Apparently, we have, let me see, two of you, I guess, or two or three of you have attended all our 6 BYC webinars. All right, and half of you are first time attending. A quarter of you attend for 2 or 3 times, and the rest of you attended more than 3 times. All right, so I'm very honored for a few of you who attended all our webinars, and for those of you who attended all 6 times, can you please chat with me, tell me or give me a indication that submit your name to me and say I'm the one that attended 6 times. Of course, we will do verification and then we have a mysterious gift for you. Okay, so those of you who have attended all 6 times, can you please write to me in the form of questions to tell me I am the one that attended 6 times, and then we will arrange something for you. Of course, we need to do verification first. All right, so I would like to hide our poll result now. Okay, let me go to Q&A sessions. Let me change back. Okay, hang on, yeah. Let me see. All right, PC, get ready for your answer, okay? Now, Mr. Wong, I am currently a student majoring in the science and tech field. My objective in investing is to gain interest from my capital over a long period of time, but I have minimal knowledge in economics and finance. What suggestion do you have for me?
I think if let's say you are investing on your own, definitely you need to read a bit more about uh, business news, okay, and then follow some of the stocks that you have interest in, not necessarily immediately investing, but then reading about them to see whether you want to or not to invest on your own. Otherwise, the other thing is to invest in unit trust, which then allow your capital to grow, but without you having the headache, okay, to monitor performance and such. But of course, unit trusts are very different from stocks, yeah, because in unit trust, sometimes you need to pay upfront the management fees, yeah, whereas in stock, okay, the trading fees and brokerage fees are actually much lower. So, and also unit trusts need a very long period of time to actually see potential gain. So if you are investing in unit trust, my advice is, wait until the market has a big correction, then you invest, because for the same amount of money, you can get more units. Whereas if you invest, in a market that when the index is very high, okay, for the same amount of money, you get lesser units. So unit trust also the same philosophy as stocks, buy low, sell high. Okay.
Okay, thank you very much for your answer. Let me go to the next one. Okay. Hi, if I'm interested in invest in rubber counters such as Carex and Top Glove, then which index should I refer to? Can I know where can I find all the index data?
I think there is no, so far I've not come across a rubber glove data or something like that, but what you can look at is that there are certain worldwide surveys that you can go into Google and key in, okay, like consumption of rubber gloves worldwide, okay. There are certain, this kind of survey throughout the internet. For every type of industry, there are one. For example, previously I did a survey on, global ceramics or global hazelnuts, kind of, or global cocoa. This kind of indexes or charts and market share, they are all readily available on the internet. So there's no proper rubber glove kind of index, but maybe there's a global trend in rubber gloves consumption volume trend, okay, which you can then search from the internet, and there is one. I remember that previously I shared with you all, there's actually a chart from Top Glove, if I remember correctly, okay, where that's actually showing some global trend of usage of rubber gloves. Okay, so these are the things you can search from the internet.
Okay, thank you very much for the answer. The next question is, where can I download all the slides for this series of webinar? I'm sorry, the slide cannot be downloaded, but we can send you the recording. All right, just Edwin, you have to email Edna at my LifeChamp.com. She will send you all the recordings. All right. Uh, Another question is, any website can I serve the game more about the latest financial news?
I think the for normally for the Malaysia market, generally I often refer to Star Online, these kind of things. But if let's say you want real-time global economy news, then preferably you go to those that are Bloomberg.com or CNBC.com. So those they actually have news live online, which you can read, give you an understanding of the direction of the global economy, okay? But they wouldn't have so much news on Malaysia in Malaysia context. So for local news, I think we still have to rely on the local news channels.
Yeah, for Malaysian news, the most I have seen on Bloomberg and CNBC is regarding our Prime Minister or MDB only. Anyway, yeah, I personally also look at Bloomberg, CNBC, Reuters, CNN for my updates on the global economy. Locally, I think the Edge is not bad lah. The Edge.
Edge also lah, Edge.
Okay. All right. So next questions. Hi, I found that your sharing is useful. I'm wondering whether there is any source of information that it can increase our fundamental knowledge on stock investing or trading. I think it's basically about same questions, so which I already explained later. Sorry, the two person asked us about the same question, so we will just go ahead with. Now, sir, based on your opinion, do you think it is the time to invest in property shares, as some of them are now with low PE recently? For example, SHL, Tambun, and Huayang are with healthy balance sheet as well as good cash flow.
For property, it's still of a challenge actually. That is in relation to the general trend in Asia. For example, in Singapore, there's a slowdown in residential properties purchases, and in Hong Kong, property sales actually plunged 70%. So over here in Malaysia, we have seen that the property market is pretty stagnant. Excuse me, I'm having a flu. But I think have some caution if you want to enter. Okay, not just only their balance sheet, but I think very importantly is that although their balance sheet is strong, what is their revenue and profit growth showing? Is it trending down? If let's say if it is trending down, then I would rather wait further. Perhaps it's an indication that the property market is softening and it can go down further. So these are the things that you need to consider. Okay, having a strong balance sheet, no doubt is important, but you have to look at the revenue and growth trend in this current economic context. Yeah, if it's down, okay, you might want to wait a bit longer. Okay, if it's up, okay, then you might want to, go in with a little bit in case it go down. You can still top up later. So these are the things that you need to consider.
Okay, not only you need to have a good balance sheet, but you also need to have a profit growth and earning growth as well, right? That's the idea we got from PC today. So next question is, as you say, this is our last webinar. Do we have any chance to have it again in the future? Oh, well, it depends on whether Bursa will have an interest to host the webinar again. And this is the last webinar for this series. And of course, we hope that Bursa will want to do another webinar series in the future. So we'll vote for that. Okay. So next question is, Mr. Wong, can discuss a bit about your portfolio management strategy? I'm more interested in it. Thank you.
Actually, for me, I also have a core holding of for value investing. I don't normally do trading because I'm looking at more longer term. And for me, I don't do margin trade as well because not that it's not good, okay, but it's my own choice. So I prefer to lose money I can afford to. So this is my choice, okay, but it doesn't mean that you should follow my choice. Yeah, okay. I always have a core value holding of shares which are over the longer term period. Yeah, and not necessarily looking at very short term gain. Hope that answers your question.
Yeah, so PC is not a trader, he is a value investor. Okay, so are there any forum discussion site recommended by PC?
I don't actually have a forum or things like that, but you can go to PC Wong in Facebook, and then there are certain links which you can read about global economy news, which sometimes I give my own insight.
Okay, all right. So, hi, Mr. Wong. May I know how is the market in these 2 years? Is there any potential political issue will affect the market?
I think I would say that globally, we are in for some very challenging times, okay? Because if you have read in the newspaper, ECB and BOJ, Bank of Japan, they are now having negative interest rates. And this is actually very, very bad, okay? Although on surface it looks like a stimulus, but this is negative interest rate had never been experimented before. And this is the first experiment they are carrying out. It will likely impact a lot of banks' earnings, okay? But the overall thing is that despite all this QE and so on, global growth is still slowing. Like US, despite QE pumping $4 trillion into the US market, the fourth quarter GDP was only 1%, versus during the 1990s, without any QE, the US GDP growth was 3 to 4%. So because of so much money being pumped, okay, but nothing to show for, we are in for some challenging times here because global growth is decelerating. Even the IMF has continuously revised, global GDP lower. So all I can say is very challenging. You have to be very selective, okay. And one of the better defensive play would be some very, very good REITs, okay, with hybrid REITs, okay, which means they are in certain shopping mall, office, and all those, okay, type of assets that at least you can assure yourself of distribution income. But maybe further down the road, you can explore the commodities market, for example, the plantations, because if global growth is really slowing down and US is actually facing a lot of headwinds, we are unlikely to see further rate hikes in the US, and that would cause the US dollar to fall. And most probably, if it continues to weaken, we might see there's a QE4 implemented in the US, okay? Now, that would actually boost commodity prices, and plantations could be one of the benefactors. But definitely, it will not happen so soon. I would say if you're interested in plantation stocks in Malaysia, pay attention to the what's happening on the US dollar, okay? If it's getting weaker, then it would lend support to commodity price.
Well, that's a very well answered questions. Now, let's move on. How do you see the REITs industry doing in the next few years? Do you see interest rate continue to increase or decrease?
I think at the rate we are going, that's unlikely to see, because right now, as I mentioned, certain sectors of the global economy, they are doing negative interest rate. Now, unlikely we'll see our Bank Negara, okay, increasing interest rate that would actually impact upon the REITs performance, because a lot of REITs, when they acquire new properties, they have to borrow money. So I don't think Bank Negara would likely to increase any interest rate unless, okay, there is a capital flight. Now, sometimes capital flight can occur when, suddenly the population of a country has no more confidence in that country's currency, like what's happening in China, okay? Because in China, there has been 2 crashes, okay? And there's a potential threat that the yuan might devalue. China actually saw a flight of capital of $1 trillion out of China. So that has caused tremendous stress to the Chinese economy. Not only that, the China policymakers are also reducing interest rate. Okay, they are not increasing interest rate to combat capital flight, but they just have more tighter controls. Okay, but in Brazil, when the stock market started to crash, there was capital flight, so they actually keep on increasing interest rate. So actually, it depends. Okay, if at any point in time there's a huge shift of pessimism towards a country's currency, then when there's capital flight likelihood, interest rate would go up a lot. This happened to Malaysia during the 98, okay, where interest rate was as high as more than 10%, because there was a flight of capital into Singapore, because Singapore was offering higher interest rate for people to save in ringgit in Singapore. So eventually there was capital control which put a stop to it. So there are some very good historical lessons to be learned. Okay, and if you are interested in this kind of shift in interest rate and shift in certain policies regarding interest rate, you can always read it from the internet. But going back to your question, REITs will tend to be a bit stable, but I would like to exert that look for REITs which very strong balance sheet and there's always positive cash flow. Yeah, so then at least that will ensure that you have a very stable REIT to invest in. Going into the future, I think unless Malaysia have a lot of encouragement to convert price assets into REITs, then our REITs market would be, pretty would see little growth like what Singapore is achieving. Okay, now Singapore has put in a lot of infrastructure, okay, to make the REITs grow very, very big into all different types of assets. So I think corporate Malaysia have to take the lead in converting some price assets into REITs. For example, they can always convert a power plant, a productive power plant, into a REIT, okay, and it becomes infrastructure REIT. There's also if they convert certain toll roads into REITs, okay, then that would be very beneficial to a lot of risk investors in Malaysia. So I think corporate Malaysia really have to take the lead in that. Okay, otherwise, forever our REITs will just be among certain key property players, because in Germany, even a education institution of higher learning, they have converted 3 of their properties into REIT. In Taiwan, broadband assets have been converted into REIT, and even ships are actually converted into REITs, okay, because they are still an asset but in the sea. Okay, so that's how REITs have grown, and I think I would think that future would be bright if, let's say, corporate Malaysia takes the lead in converting productive assets into REITs. Then we will see REITs really blossom in Malaysia.
All right, thank you very much, PC. So the next question is, I wish to do investment personally. When will be the best time to penetrate into the market?
I think currently will be like I say, this year will be a bit of challenging because globally the whole market is very volatile. So you have certain ups and certain downs. Okay, but if you want to start, okay, always start with those that can yield you good dividends. Again, I will go back to REITs because in REITs they actually have they are regulated, okay, to disperse 90% of their net income, okay, and their borrowings are also limited by regulations, is that their gearing cannot be more than 50%. So this would be the safe kind of investment for you to start on your own first, okay, on small amount, and then gradually you grow. So whatever income you earn from your REITs will be your capital, okay, which then you can either look at certain trading, okay, and move from there. There's no fast and easy way, because if you want to invest on your own, you really need to do a lot of reading, okay. You must be aware of what's the direction of not just the, okay. Hope that answers it.
Okay, all right. So the next question is it the right time to invest in iBerhad since they are launching the project of King of Hill? Also, I would like to ask about the stock of Top Glove. How do you think about that?
I think, as I mentioned in some of the questions just now, um, the property scene in Malaysia, you have to be very careful, because everywhere in our neighbors, they are actually seeing declining sales here. So this is a general trend, and in Hong Kong and in Singapore. So you need to be very careful. Okay, I would not say whether it's advisable to invest in one particular company or not, but you always have to go back to the balance sheet. Okay, look at whether there's revenue growth or net profit growth. Now, versus if let's say there's a property counter versus a REIT, for me, because I'm always not a always very mindful of certain risks. Okay, I would actually invest in REITs, because a REIT actually has completed and hard assets at which they own. Okay, it's not like a completing project. Okay, so that's why I would prefer REITs if let's say I want property exposure. Yeah, because I know that the assets are all completed and they are now undertaking rental, versus launching a project where where depends on the take-up rate and so on. It doesn't mean that a property counter is not good. It's just that I'm just sharing with you my preference if let's say you want property exposure. As for Top Glove, I think as long as a counter register growth in profit, okay, growth in revenue, and there's cash flow from operating activities coupled with a strong balance sheet, then I think it will be a good time, okay, to enter. But in view of the headwinds, okay, the global economy is facing, I would say that go in a little bit first, okay, and see where it goes, because right now the US dollar is very volatile, because Top Glove exports most of its products and they earn US dollar. Okay, if there's a fall in the US dollar, it will impact upon the the return in revenue, because as long as the US dollar is high, the revenue will be good. Okay, but if let's say the Federal Reserve decides to not to increase interest rate, or they undertake QE4, all this would actually devalue the dollar. Once they devalue the dollar, okay, the revenue that the forex gain may be impacted somewhat. So again, like I say, always look at the trajectory of the profit growth and revenue. If let's say the company's balance sheet is strong, if there is stagnation, which means the revenue is not, has been pretty stagnant, then I would think that I might as well move my money to a company that is showing promise in its growth in profit and revenue. Okay.
Okay, just this is my personal questions. But I think that was a very well answered questions to my to the previous question. But just now you mentioned about cash flow from the operating activities, right? And from my interaction with you for the past so many webinars, I think you keep mentioning about the importance of a healthy balance sheet, strong balance sheet, importance of profit earning growth. But I never have I heard of you mentioning about cash flow statement. But just now you mentioned once.
Yeah.
So my question to you
Yeah.
is, do you ever look at
Why?
cash flow statement for fundamental analysis, or do you not look at?
Okay. I think okay. I only started looking at it more pay more attention to that in recent months here, partly because of the deteriorating economic situation. Previously, I always look at this. Now, if let's say there's net profit growth, okay, definitely there's positive cash flow from your operating activities already, yeah. But in view of more challenging, let's say I want to narrow it down further, okay, to greater detail, because any investment decision that I make, okay, have to be more refined already, so that previously, in a bull market, that revenue growth, profit growth, strong balance sheet, okay, that's it. But in view of deteriorating, it's best to have one more level just to make sure. So that's why nowadays I'm also looking at the cash flow statement, just to be really on the safe side. Okay, no doubt, net profit growth would easily, can be translated into profit from the operating activities, but cash is just as important. So that's why I also, yeah. So in terms of balance sheet, when it comes to the current asset, I also now start looking at the cash at hand as well. Whereas previously I just look at the current assets, and that more or less tell me the whole story. But need to zero in as economic conditions become more challenging. Yeah.
Okay, yeah, because some people may cook the book, even though they got profit, but their operating cash flow may not see the increment in terms of the operating cash flow. So the next question is, would you agree during this time to invest in the oil and gas counters such as your UMW OG, as I'm optimistic that crude oil price will bounce back?
Okay, I can tell you that oil price is not bouncing back. You can see that the hype of the Russia talk with Iran is just hype. Okay, with OPEC is just hype. Now, it benefits both Russia and OPEC by just saying that they are willing to talk. Oil price have moved up from $27 per barrel to recently $38 per barrel. Looking at the WTI crude. Now that itself is a lot of money to these two blocks, okay, Russia and OPEC, because each of them produce more than 10 million barrels of oil per day. Now if it moves up by 10, it's 100 million barrels more. $100 million more. So by just saying that they are willing to talk, in this 1 month period, they make billions of dollars extra. But today, just 2 days ago, Iran said we are not going to enter into any production freeze until we achieve 4 million barrels. And what we have, oil has fallen from almost $39 now to about 36, and it will fall further because all these are based on talk. Now, production freeze has no impact because if they freeze in January is the period where all of them are producing at record capacity. And how can they actually initiate a production cut when the US shale operators say at US $40 per barrel they are going to increase their production some more. So this will cap the price of oil, and therefore oil will not go up. But unless in this 6 months time we see substantial bankruptcies among the US shale oil producer, because out of the US shale oil producer there is $350 billion of debt in distress. So if about 50% of them go bankrupt, then yes, maybe then oil would actually go up, because right now the fundamentals of oil do not support that kind of price. The storage capacity at Cushing in Oklahoma is already at 88%. Last time at 80%, it can cause oil price to fall. So all these are actually smoke and mirrors. Okay, I would say that stay away from oil counters for the time being until such time the US shale oil producers start to file a lot of bankruptcies. Okay, which means then they are out of the equation. Okay, and therefore oil price should be able to move up. Maybe later part of the year, I'm not sure, but keep a lookout on what's happening if you are interested in oil, yeah? Because Malaysia have no influence on the price of oil. It's all what Russia does, OPEC, and US. Okay, so these three you have to look out for news. Okay. Look out for US shale oil production filing a lot of bankruptcy, a lot of bad debts. Look out for Russia and OPEC talk about maintaining their production or cutting production. Now, production cut will actually cause oil price to go up, but production freeze, it doesn't support any price, especially current price, yeah. And Cushing also at Oklahoma, look out for report that talk about its storage capacity. So all this you can actually read from the Bloomberg site. There's a market under the market segment. You can actually look at EIA, the Energy Institute reports and all those. They will tell you whether how much is the production, storage at Cushing, and so on. Okay.
Okay. All right. So the next question is very well mannered. It says, "Good evening to our speaker and host. So frequent that we heard about people saying that Malaysian market is not transparent and it's all about insiders. What is your stand regarding this statement? And so I've heard that news that we got from newspaper that actually led, which could be misleading or lure inexperienced investor into the wrong boat. How true do you think that we can access to those news? Thank you."
I think globally, all markets are manipulated one way or another. Okay, even in the U.S., for example, in U.S. you have the suppression of price in gold and silver because they do not want to let the gold and silver increase. Therefore, a lot of the bullion banks are short selling gold, so much so that the gold leverage, okay, in the COMEX is 542 buying per one part of gold that is available to be delivered. Okay, that's market manipulation. Okay, and you can see all the market manipulation. Okay, when you see all the big banks being sued. Okay, for LIBOR and also for forex manipulation. So in Malaysia, I think there's always some kind of manipulation or what you call it, you know, but that is happening everywhere. But most importantly is how are you going to reduce your exposure when you make an investment? That is the most important point. Now, sharpening your skills, okay, and studying the fundamentals of the company's strength, its financials, and its profit. Minimize the risk that you are going to be exposed to. Okay. It's very important. If you follow the herd, then as an individual, if someone told me that to invest in this company, okay, so that's why, to what degree, whether it's we ourselves are the willing victim to be manipulated, or there are other manipulators, at the end, you know, how are you going to reach to a level playing field? And that is by understanding of the financials and also the potential of a company. Then you are in a level playing field, and you will not be swayed by what people say or ask you to buy. So that is the most important rule in investment.
Okay, thank you very much, PC, for your answer. We are almost 10 o'clock, so no more questions coming in because I still have a lot of questions on my screen now. But so PC would appreciate if you can keep your answers to those brief. So next question, how many percent of technical and fundamental analysis you use in share trading? I think he just
I
want a
don't
comparison.
usually trade. Yeah, I don't. My fastest trade, I think, is a few months. Okay, I don't do daily trade. Okay, so it's all value investing more.
Okay, all right. So the next question is, do you have Any suggestion for apps to do technical analysis besides chart nexus?
I don't have any, because I'm not a technical person, I think Chun Xian would be the best person to answer it.
Actually, I only use chart nexus. Anyway, so next question is, hi sir, what do you think about exports stock recently? If the Fed increased interest rate, will it directly affect the sales of export stock due to depreciation and ringgit? I think you somehow explained that just now already, but maybe you can
Yeah,
explain.
I think as any increase in interest rate will actually increase the value. That will not increase interest rate. Okay.
Okay, all right. So is it the next questions? Okay,
Question?
Mr. Wong, this is a very deep question. May I ask what are the impacts to shareholders in future if we invest in a company with warrants issued? What are the things we need to consider?
I think the most importantly is the amount of how much that warrant would allow the new for you to buy the new shares and so on. Now, any form of warrants convertible to shares and all those are also a form of dilution. Yeah. So always look at whether now one of the key things, if the company current current price to book ratio is high, and after whatever conversion it is low, then you have to measure that against the against its EPS. So sometimes if it's a form of dilution, the price to book value may look pretty low after dilution, but then you need to look again is EPS, whether after dilution there is a growth or no growth. Okay, because often a lot of companies they either do share buyback or they increase amount of shares or through warrants and all those is a form of dilution. So at the end of the day, what you're interested is EPS growth, because for a company that takes in a lot of money, okay, either through warrants and all those rights issue and such, you want to see EPS growth. If let's say the company has a history of EPS growth that is not remarkable, then I wouldn't want to invest in the company despite, they may offer rights issue, bonus issue, or whatever warrants.
Okay, great. Now the next question is, how do we calculate gearing ratio from annual report? Hello?
Yeah.
Do you hear my questions?
Yeah, for gearing ratio, perspective of REITs, yeah, gearing ratio for REITs is normally calculated as total borrowings, both current and non-current, divided by the total for REITs. They are very specifically in that kind of calculation. But if you want to look at for other types of public listed company, normally I would prefer to use the debt to equity ratio. Why debt to equity ratio? Because I total equity. Therefore, I know what is the maximum damage. Okay, some companies they like just the long-term borrowings, okay, without including the short-term borrowings and so on.
Mm-hmm.
Using the debt to equity ratio.
Okay, so Mr. Wong, what is your view in technology sector in future, especially the industry with manufacturing semiconductor? As this is the generation of technology, the products technology industry are just anywhere.
Well, technology will always have an edge going into the future. But right now, if you look at certain um, Apple sales actually have fallen, okay, and a lot of the Chinese brand, like Xiaomi and things like that, globally, okay, has also fallen. I mean, in China has also fallen. Then you also have those technology for the time being will still be under a bit of a pressure. But of course, in any upswing, okay, of certain consumable electronics, yeah, then that would be a good indicator for investing in certain technology sectors. So it must coincide with, demand from consumer electronics or those kind of mobile technology.
Okay, great. That was the last questions we had tonight. The rest of the question is asking me who ring the bell. Sorry, I have a late night visitors who came and visit me, so I had to open the door for them just a moment ago. But anyway, that was the last questions, and thank you very much for paying attention to this webinar. And now we would like to pick the two most proactive guests or attendees for our webinar, and the winners will redeem a mysterious gift at the next Bursa Investor Education Workshop, which is on, sorry, I think the topic is not choosing the right investment strategies. I think I wrote it wrongly, but which is another topic. But the Bursa Investor Education Workshop will be held on April 23rd, Saturday, from 1 o'clock to 5 o'clock. We will give the two mysterious gifts to our two most proactive participants in the webinar. And the first person is the one that attended all the 6 webinars, Edwin Soon. All right, so you have just told me that you are the one of the participants who have attended all 6 webinars, and we have verified it. So you will be the lucky winner for our mysterious gift in the Bursa. You can redeem it at Bursa Investor Education Workshop on the April 23rd from 1 o'clock to 5 o'clock. At the same time, you can also listen to the Bursa Investor Education program. The next lucky winner is, let me see, just now I got the name. Hey, hang on, where's the name? Is Mr. Pe Gong Chia. Sorry, is it Mr. or Miss? So you will be another person, Mr. Pe Kong Chia. You'll be another person who will redeem our mysterious gift in the next Bursa Investor Education Workshop for asking us very good questions and for getting yourself very engaged in the webinar. This is just a reward to encourage participations. All right. But in the meantime, I want to share with you. Another exciting program coming up from the Bursa Investor Educations Department. So they have this program called Bursa University Day. Now, I'm sure that most of our attendees today are probably university students. So if you are university students, you may want to get involved in the Bursa University Day that is specifically designed for undergraduates to understand and learn about the capital market. And not only will you understand about capital market, you will also in the afternoon sessions they will also prepare uh, a few sessions that will help you to tell you more about the career in the capital market. So not only Bursa provide you financial education, they will also want to bridge the gap between the capital market and the talents who will be accessing the capital market. So if you are very curious or if you are uncertain about how you can become a professional in the capital market, I suggest you to go to the Bursa University Day, which will happen on 26th of March in UCSI University. In the afternoon, we have people talking about um, career opportunity in the brokerage industry and to become the chartered financial analyst and to become opportunity with the graduate representative program. And they also invited national youth icon Mr. Michael Teo to talk about how you can develop yourself to be a Gen Y superstar. All right, and not only is this university day, a very informative day and educational day. It also comes with a lot of fun, and we have lucky draw and prize presentation for Instagram and quiz winners. So it's designed to be very Gen Y, and you have a lot of opportunities to win prizes, and we have prizes, amazing prizes waiting for you. And how you can register? You can register it at, hang on, let me type it for you. Enroll for University Day at bursamarketplace.com. So I've just sent it to you. Enroll for Bursa University Day at www.bursamarketplace.com. It is 26 March at UCSI University, okay, in Cheras. So we are very glad to be partnered with UCSI University. 26 March from 9 o'clock, sorry, from 10 o'clock up until 5:30, all right? 10 o'clock up until 5:30. If you want to learn how to become a professional in the capital market or to upgrade your skills in the capital market, for those of you who are asking us a lot of good questions, I think you can find out more answers to your questions in this Bursa University Day. With that, I want to thank everybody for being a great supporter of this Bursa Young Investor Club webinar series. This is our sixth series, and this webinar series is made possible because of the generosity from the Bursa Malaysia, who want to go out to the market and educate young people, young and prospective investors to become share traders or stock investor. All right, and if you have any question in relation to the webinars, you can also contact our speaker today, Mr. PC Wong. He is a full-time investment analyst at WPOOICHEE@gmail.com. That's his email. You can email him in regards to any further questions. And with that, PC, have any things to share with them?
No, thank you all for
Uh,
listening to the series of webinars, and a very good night to all of you.
All right, so thank you everybody for paying attention and being a great audience in this webinar. And we hope you would enjoy our series for the past 6 sessions. We thank you for your patience and thank you for your time for coming to learn with us. And of course, lastly, I hope that we can see you in the Bursa University Day. So please enroll yourself at www.bursamarketplace.com. Thank you and have a pleasant rest of the day. Bye-bye.
Okay, good night. Bye-bye.